Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade action that we saw on the day. Monday, it was a bit of a smackdown in the wheat market, and we are going to discuss that and much more. Joining us, our good friend John Heinberg with Total Farm Marketing. John, good to catch up with you, sir, and I hope you had a good weekend. Hopefully it was better than the way this market turned out as we just kind of leaked lower all day long on Monday, John.
Yeah, pretty difficult day today, led by in the grains. Actually just markets in general today. You got stock market down over 500 points, big turnover in crude oil today with all the outside information going on there. Obviously, the grain markets just still struggling after last week's kind of debacle in terms of what happened with the EPA and the soybean oil market. When cattle and hogs are trying to get some footing, we at least held some gains there, but those didn't even finish the strongest in terms of its trade today. So kind of what started off as a bit of a mixed day, maybe a little optimism in a couple of those outside markets, turned into a pretty much a risk-off type day, kind of triggered by an article put out by the Wall Street Journal talking about the Fed raising interest rates up to 5%. That's a little higher than the market's anticipating, and I think that's what just kind of sent things a tumbling today outside of what was already happening in those grain markets.
Well, and speaking a little more on what was happening in those grain markets, what's going on with wheat? I mean, we just can't seem to find any support in this wheat market. It looks like there's some negative chart signals maybe, and obviously that was our catalyst, our leader to the downside in grains. What's going on with this wheat market? Can you make any sense of it, John?
And it's a difficult market to make sense of. You got so many different prices globally. You got concerns regarding weather in some regions, and then just watch, the Ukraine war. We've lost all that premium. In fact, wheat is now trading, I believe, negative on the year with today's price action. And again, then you throw the technical side in. The funds have been short the wheat market now for multiple weeks. Keep growing that short position, and they're putting the gas down in terms of putting the foot on the pedal a little bit here. Just most recently with this last break, that's really been the trigger that's led to the corn market pulling back. Obviously, just the chaos that's been going on in the soybean market the last couple of days hasn't helped anything there either as well. So right now it just comes down to this. U.S. wheat is still too expensive. We still can't find the demand. Maybe we got a little bit of weather coming through the southern plains that can provide some snow, and we'll have to watch how that develops going forward. But with all those things, again, the charts, the technicals, the money flow, all just seem to be on the negative side in this wheat market. Now, with that being said, there could be something that could trigger something very quickly, funds quickly be on the wrong side and see some recovery. Global wheat supplies are still not where they need to be in terms of available wheat, and that still could come into play. But right now, the path of least resistance is still lower, and it just seems like that's the easy trade to make, is just to sell the wheat market.
Well, and the dollar, I know, broke lower to some lows we haven't seen in months, but then rallied on some of that news you mentioned, talking a little bit about that Wall Street Journal article and more. So obviously the dollar rallying going to create a headwind, and wheat, the trouble we're having there seemingly spilled over into corn and ended up pulling corn to the downside. I think it was the March contract. We went and maybe filled a chart gap on Monday in the corn market. So you look at that, what do you make of the direction corn is headed right now, John?
Well, everything there, like the wheat market, is pointing to lower at this time frame. I mean, we broke through some key support levels last week. We kind of needed to hold that 100-day moving average around 660. We quickly blew through there on Friday, follow through selling today. We did go fill that gap at that 638 level, and it held us. So we'll see if that can be a point. Maybe we get a little bit of a turn, but the path of least resistance, like in wheat right now, is looking lower in corn. If we get some recovery, it might be just back to a point where we can get some defense build or make a few sales, that type of thing. Because right now, this market is very concerned about the demand and what's could be happening there. Now, prices are starting to get a little more competitive globally with this break. Maybe we'll see some demand news pick back up. That would be kind of key. Obviously, we got USDA report on Friday this week. We'll see if the USDA makes any adjustments. Right now we're very far behind in terms of corn sales on the books, but with this price break, some talk that Brazil may be running out of corn because they had a big export window last month. So that could be something we tighten up here. That makes us the only market in town. And next thing you know, we see some big export sales numbers and things get caught up fairly quickly. And that could be a stabilizer price. I mean, that's still what we need right now is some type of a trigger this time of year. And usually that trigger is going to be some demand.
Well, and I look as well, and you mentioned demand, and I know that's a big worry right now. And you brought up Brazil. I saw some interesting nuggets about maybe Brazil, shutting off some of their supply of corn. What to make of that, don't know. But, long term, South American weather, at least Brazil looking really good right now. So we have to wonder if their weather holds, what is that going to do for our exports, and then China's economy reopening. There's so much swirling around that Brazil-China relationship and how their crop pans out, John, that I feel like it's going to make things volatile here the next couple of months.
It's going to keep the volatility in the marketplace, and until we get some true money flow one direction or another beyond, right now the path of least resistance is lower. It's going to keep this market very, very headline driven, which is unfortunate because, again, we still have a tight supply picture here.
Mm-hmm.
What if the USDA decides to kick the can down the road again with the anticipation that we're going to see some more demand build, and they said, at this time frame, let's just hold on making export demand adjustments. I still think that's going to be a case maybe in that soybean market. We'll see. Right now, Europe bought a lot of corn last month from Brazil, basically trying to fill that tight supply picture they needed. China and Japan are lacking in U.S. sales. Some of that corn in Brazil may not be as available as they want it to be, and they may have to turn to our shore. So we'll have to see if that kind of finds some chance of developing. Plus the other thing, still just talking producers in most areas, it feels like the cash market is still very, very strong. There's some decent support out there looking for the secure bushels. To me, that can provide some lift into the market where the cash market actually has to do the heavy lifting versus the futures market here. So we'll have to just keep an eye on that. But right now, again, I'm just a little nervous that we got some downside flow here. What was interesting on that commitment of traders last week, the funds actually picked up over 20,000 contracts of corn on last week's commitment of traders report. And those positions quickly got behind the eight ball as the week went on last week with that strong sell-off. So we're kind of curious if they're just liquidating. Are they moving some money to the different locations? Covering some margin calls because of what happened in some of those other markets. A lot of little pieces to put together in here. So, Yeah, with that being said, looking forward to seeing what next. We got to maybe just get through the end of the year and see what things kind of shake out as. Get through these numbers on Friday and maybe get a little clearer idea. But at least right now, though, I'm a little defensive just because of the way the money wants to flow and the path of least resistance.
One more thing on the corn market before we shift gears. I know basis still remaining pretty okay. Western Corn Belt. We look at the futures board start to slip a little bit. Any new thoughts or, mentioned being a little defensive here? Anything for guys as we get in the last couple of weeks of the year, guys and gals, if they're looking to move some corn? I mean, feels like, maybe they're sitting here watching this market slip and slip and slip, and maybe they're getting a little antsy, want to do something. So I just wonder, what your thought is with this corn market as we head to the end of the year, if we need to make some sales and make some moves.
Yeah, if you need to move some bushels here, you're still got really good value on the board, especially if your cash market's staying there. I mean, think where we were last year at this time frame, about 575. So, we're still trading 60, 70 cents above the board from last year. So again, there's still decent value for producers. I know it's not where we were a week ago when we were pushing 670 and had some really good opportunities there, but still make sure if you got to move bushels, somehow protect it. If you think this is a limited sell-off and this is going to come back to us in the spring, but you want to be safe, make sure you're looking at some early put protection. You got January puts to get you through the report this week and into the end of the month. There's February options available that are all tied to the March contract. There's not a lot of cost to those at this time frame, and at least you can put some type of floor and let the bushels be flexible to the upside if this thing does decide to turn around. Obviously the longer range view, we still got to worry about U.S. weather, but right now, again, you got to assume everything's going to be normal until proven otherwise. So again, you've lost value. Make sure you put a stop to that loss if you want to hold it, or if you push those bushels out, maybe then we'll sit back and look for that opportunity to re-own in case weather does not cooperate this summer.
John Heinberg, Total Farm Marketing, is our guest analyst here today. John, let's talk this soybean market. I know a few different items there. Bean meal did its best to hold beans up, but again, all that pressure in soybean oil that continued follow through selling, and then the pressure in the other grains seemed to finally pull beans at least mixed to slightly lower on the day Monday. But since you and I talked, we got this bean oil market just collapsing. I mean, what do you make of the situation in this soy complex as bean oil continues to liquidate and we start to widen that meal oil spread a little bit here? What do you make of this complex right now?
Now, obviously, the EPA news last week really put everything into a spin just because this market was really betting on heavy expansion in the biodiesel sector, and those EPA numbers really didn't reflect that. Now, again, that's still going to be driven by the local demand and what's going to happen in those individual markets where those new crush capacity, that new crush capacity is going to be coming online in the products that they produce. But you had a market that was heavy on the long side, vulnerable to that type of a break, and it just kind of fell into a perfect storm with that information that came out last week. Soybean meal, though, again, that might be a little bit of a reflection of the Argentina weather at the same time. Again, that meal oil spread's a very popular spread trade. Obviously, right now working very, very well given the weather in South America, as well as that issues regarding the where we are with soybean oil. So again, that's why we're seeing that spread really move out. With that, though, we still got some demand activity. China picked up 130,000 tons of beans this morning. There was talk last week they were in the market buying 15 cargoes of beans, split between mostly the United States, Argentina, and some for Brazil. They still have needs to get filled for January, and we're still the best bean available. Even though our export window might start slowing down because we're getting to that time frame where it does in terms of sales and new sales coming on the books, we still got some decent demand out there, and we're actually ahead of the USDA for forecasted pace. So I'm not expecting to see maybe a demand adjustment on this next report in terms of what we get from the USDA for overall export demand. And then the crush numbers were strong again last month. If anything, maybe we get a little bump there that could tighten the carryout. So, beans hung in there pretty decently today. I think when the break in crude oil finally came, that pushed that bean oil down over the $2 per pound level, just kind of weighed on the bean market in general. But one thing I still kind of watch, what are the spreads doing? They hung in there very nicely today. Crush margins did fall apart, but there's still some profitability there for the crushers to buy U.S. beans. So again, still like where the bean market is here, but obviously cautious, just kind of way things traded today on to start the week.
Any new advice or anything different in the soybean complex if we're looking to make some sales before the calendar flips to next year?
Take advantage of the prices that are out there. Again, we're still counting on that record South American crop to be there from Brazil. Don't have anything really showing me anything differently right now based on weather. Obviously you'll see some news in certain pockets here or there that could cause issues, but that's just, again, Brazil is a massively large country. That'd be just very similar to small pockets of issues in here in the United States during our production year. Overall production will be good. You still got to count on basically this market probably being overvalued compared to those Brazilian beans that we get into spring. And we're talking about those Brazilian purchases from by China this last week. Those were for March delivery beans where we have a significant premium. So if I'm a producer, I'm still looking at $14 plus on the board. See where your cash market is. If you think we got some things coming down the road, make sure you protect that with some put strategies. Or go ahead and make those cash sales and look at those reownership strategies in case the weather does turn nasty, in terms of that South American crop down the road or our crop coming this spring.
Feeder cattle demand improved a bit as corn weakened on the day Monday, but hogs, live cattle were just kind of mixed, firm, relatively quiet trade. It felt overall in the protein sector Monday. What are your thoughts there, John?
The feeder cattle market charts look really good. We're really touched on that for our afternoon report today. $3 to $4 rally last week to finish the week based off that corn market break, kind of break it out of the top of some nearby ranges. So it looks like feeder cattle could be at a little bit of a bid. From talking to producers out there, the cash market has been well over the feeder market most of the year. So maybe we're finally getting some reflection of the supplies that are tight and the demand that's out there, especially with this break in the corn price. So like what we see in the feeder market, live market, obviously still in a little bit of a seasonal window here. maybe have a hard time getting things to push out a little bit. Didn't really like the price action today. I would like to see it stay a little bit more in the green. Obviously, we're going to keep a close eye on cash trade. So I'm talking to some local producers. There's still some really good bids out there that should keep things probably steady. Maybe pick up a buck this week. You need to see the retail values firm up a little bit to improve those packer margins. But again, it's a market I still like right now is the cattle market. Might be real hard to get maybe up over top that 155 on the February or 160 level on the summer months at least, or the spring months at least here in the near term. But I think as we move into 2023, we get that next seasonal rally that we like to put a top in for the winter, that could show some pretty good strength out there. That'll be definitely a level we want to make sure we're protected.
John, how about that dairy market on Monday? Looked a little mixed to lower. What are your thoughts there?
We're really concerned about cheese demand as we're past the holiday buying window here, and that's definitely been reflective in the price. Block and barrel prices have really spread out. Now they're starting to wind down, at least in getting closer together in that spread. And that was being led by the block price coming down, which usually carries right into the milk market. Hopefully we can hold this $20 handle on the January contract. Charts look a little bit weak. They get a little bit of a price pop towards the end of the week. But right now the path looks lower, at least in terms of the overall direction of that market, especially in this window. We need to see the demand pick up because production's still there. But again, the demand is still going to be the key in getting those cheese prices back up, lifting up that milk price.
Well, John, as we look to wrap up the show today, always a pleasure. Any final thoughts? Anything else you want to reiterate for folks today?
It's going to be volatile times. Things are going to change, move directions quickly. We've been talking about this for weeks. Make sure you protect value when it's still there. Now, there's still decent value out there for both corn and beans. Maybe not where it was 2 months ago, but at the same time, still pretty solid numbers. Don't play the let's hope and see game and see if prices come back, because, this is a market. We have a lot of moving pieces outside of the ag sector that can drive prices one way or another. Just make sure you're using those strategies. Leave the price flexibility to the bushels if you think things are going higher. But if you make sales, make sure you're looking at somehow to keep that window open. There's a lot of, like I said, a lot of moving parts, and this path of prices can change very quickly just given a headline or two.
Definitely a lot of things to think about. John, if folks want to reach out to you and talk with you about some risk management strategies and more and discuss their operation, the marketing plan, if they want to talk to you there at Total Farm Marketing, what's the best way to do that?
Sure, Jesse. I'd love to chat with them anytime. Give me a call, 800-334-9779. Shoot me an email, johnh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. A lot of great information for producers out there. We have a webinar coming up with this report here too, so take a look for that. Just as a good summary of that overall report. Again, just take advantage of the stuff that's in front of you in terms of information to help you with your marketing plans.
And again, totalfarmmarketing.com is the website. With that, John Heinberg, appreciate the time as always, sir, and we will talk to you next week. Thanks so much.
Sounds good. Have a great week.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.